Hey everybody, Real Estate Ninja here. I hope you're doing well. Got some great news out of CNBC today, and it is on mortgage demand, how it is absolutely cratering right now as mortgage rates continue to rise. Buyers are getting fearful, and we're also seeing sellers start to probably freak out with news like this. Here we go. Mortgage demand drops from home buyers. Sorry, mortgage demand from home buyers drops to a 28-year low. It says right here, mortgage rates moved higher again last week, pushing buyers back to the sidelines just as the spring housing market is supposed to be heating up. This is the time where the tax returns are coming in, the weather is starting to get nice. This is when seasonality, the mortgage, the industry, the real estate market starts to turn, it starts to go positive, right? And we are seeing the complete opposite of that because of the effects of both inflation and the Federal Reserve raising interest rates. It says here, mortgage applications to purchase a home dropped 6% last week compared with the previous week, according to the Mortgage Bankers Association's seasonally adjusted index volume was 44% lower than the same week 1 year ago and is now sitting at a 28-year low. The question is this: as the Federal Reserve, Jerome Powell, and the other Fed governors are looking at data like this, do you think they want to stop raising rates or possibly lower it because they're freaked out about mortgage applications falling, or do they care more about the cost of food and energy rising? I believe it's the latter of the two. So I believe that we are going to continue to see higher rates. Now check this out. It says here, this as the average contract interest rate for 30-year fixed rate mortgages with conforming loan balances, which is $726,200 or less, increased to 6.71% from 6.62, with points rising to 0.77 from 0.75. This includes the origination fee for loans with a 20% down payment. To even fathom that a mortgage rate, I will be honest, this is higher than what we saw during the Great Recession. I never had to deal with rates this high when I was buying homes in the early 2000s. I mean, this is high. And back then, to think about what the median home price was back then compared to now, it is absolutely staggering. Now it says mortgage rates have moved 50 basis points higher in just the past month. Last February, rates were in the 4% range. Now, quite frankly, I believe because you're going, well, 50 basis points, that's more than the Federal Reserve has raised in the last month. The reason is because banks are turning into a risk-off environment. They do not want to be putting out mortgages just to anybody because they are seeing the dominoes fall as well. So they are looking for people with stellar credit score, large down payments, and obviously those kind of people that will most likely be able to get through this next recession, which I believe will be much larger than a recession. Now, it says here, applications to refinance a home fell 6%, like we were saying, for the week, and we're 74% lower now year over year. And we keep seeing that year over year number get higher and higher and higher. Mortgage rates haven't done much to start this week, but the trajectory now appears to be higher after a brief respite in January. Lower rates to start the year caused a brief surge in home buying, but mortgage demand from home buyers would seem to indicate a very slow spring ahead. Ladies and gentlemen, we are seeing historic numbers coming out for not only mortgage rates and interest rates, but also debt levels. This is absolutely a massive, massive opportunity that's coming our way, and we want to make sure that we're prepared. You want to see where you are in this rate hike cycle, and I will tell you this, from my professional opinion as an investor, my non-professional advice though, we have only just begun. We are going to see much higher mortgage rates from here, which is going to continually put pressure on the market. Guys, this is the time to get ready. This is the time to get your credit score tightened up, get out of debt, and get ready with some cash on the side because there are going to be some awesome opportunities in the next year and a half, 2 years. With that being said, I thank you so much for watching. The Real Estate Ninja is out.